It's currently 6 o'clock in the morning, so good morning, bro. Nah, jokes aside, today we are going to analyze Tesla Incorporated with the stock ticker TSLA because Elon Musk just recently announced that he's going to get a massive fucking salary. So I was thinking, okay, bro, let's take a look at the stock together and see if we should also add this very famous company to our own portfolio, okay? And as always, we are going to analyze the stock using my little Canva presentation that I have right now here. So let's begin, okay? Now, why should you listen to me? My name is Yasha and I am your best investment advisor who will help you make smart decisions in terms of investments, okay? Now, this is me right now here. And additionally, bro, I also know quite a few secret strategies that will help you outperform the S&P 500. So click the first link in the description if you are interested. Now let's proceed with the analysis. This is going to be very simple, straightforward and beginner friendly analysis without any shitty talks. I don't want to be like your professor in your university who didn't teach you anything, okay? Now, as a beginner, you should generally care about the following 6 things. So chart, profit, debt, money on the bank account, value and price. Now let's proceed with the chart. So for chart we have here a little instruction that tells us chart has to grow for all 10 years. Now what does that mean? That means that I will first of all draw a little exponential line, kinda like this, and then we will compare the actual chart with this line, okay? So as you can see, the chart should grow just like this line. Now what do we have here? First we had no growth whatsoever, and then a massive growth, and then massive fall, and then a bit growth, and now fall again, okay? So as you can see, bro, the chart does not follow that line because it's a bit inconsistent, okay? Of course, the chart can go up and down, up and down, up and down, kind of like this, but generally it has to follow that exponential line, it has to follow that growth, okay? And here we don't have that, so chart is not good, okay? Now we come to the profit and we have here a little instruction that tells us profit has to be in plus and it has to grow. Now you can see, bro, that the profit until 2020 was in minus, which already tells us fuck no, you know. We want to invest in companies that are consistent in making money. That's it. We want money into our pocket and not out of our pockets, okay? We want the money coming in. And here we had the money going out, so fuck no, okay? Even though you can see, bro, that the chart also here follows that exponential growth, so we will see what happens in the future. But since the company had here losses, you know, nah, it's not worth it. It's fucking shit, okay? Now we come to the debt, and the instruction tells us that debt has to be low, plus it has to decrease through the years. And this is one of the very few stocks that we analyzed that actually matches with that criteria, because you can see that since 2019, the debt is actually decreasing, which is an absolutely amazing sign, bro. So good job, Elon Musk, with that, okay? Now we come to the money, and with the money, we want to see how much money do they have on the bank account, and they have to have more money than they have costs. Now, how do we know if they have more money than costs? It's very simple, bro. Take a look at the bank account. They have plus $1 billion on their bank account, which tells you, bro, that they have more money than the costs at the moment, which obviously is true because take a look at the chart here. They have massive net profit. I mean, yeah, they have massive profit, so obviously they have money on the bank account, okay? That's good to go as well. Now, in terms of the value, we want to invest in stocks that are undervalued, okay? Now, we measure that by 2 things. We measure P/E ratio and we measure intrinsic value, okay? Now, as a beginner, bro, this might sound a bit complicated, but as a rule of thumb, bro, P/E has to be lower than 15 and intrinsic value has to be higher than the price. Now, let's take a look. P/E of Tesla is around 46, 47, so of course it is higher than 15. So in terms of the P/E, bro, the stock is overpriced, okay? Now we come to the intrinsic value, which has to be higher than the price. Now stick with me here, this might sound a bit complicated, okay? So intrinsic value of Tesla is $58, okay? What does that mean? That means that at this exact moment, the fair price of Tesla should be 58, sorry. Based on some calculations about the cash flow, income statement, balance sheet, whatever, based on those calculations, the stock price at this exact moment should be $58. But the problem is that the current price is $182. So the current price is actually for $124 higher than the fair price. So the stock right now is for $124 higher than it should be. You know what I mean? I know that I'm repeating myself way too often, but I really want you to understand this concept, okay? So basically, this intrinsic value tells us the stock price that this stock should have right now, and then the price is the actual price, okay? And since intrinsic value is not higher than the current price, that means that the stock is also overvalued in terms of the intrinsic value, okay? Now we come to the price, basically price of the stock, and we want to see the price lower than 150 euros or dollars or British pounds, whatever, because we don't want to invest in overpriced stocks, okay? Now, rule of thumb here is 150 is kind of the border between like good price and the bad price, you know, but still here Tesla has 182, so it is above 150, so no, price is also not good, okay? And now, bro, we come to the final evaluation, as you can see right now here, where we will just summarize everything that we discovered so far. So let's go, okay? Now, in terms of the chart, bro, as you can see here from the beginning, chart does not follow that exponential line, so chart is actually bad, okay? We will mark that as a bad thing. Now, profit is also bad because until 2020, they had like minus, so nah, that's not good at all. Now, debt is very good because they are decreasing it since 2019, so that's a good thing. Money on the bank account is also good because they have $1 billion in plus. Then in terms of the value, is Tesla way overvalued, both with P/E ratio and intrinsic value. And in terms of the price, Tesla is also overpriced because it's above 150 euros, okay? And now the decision whether we should buy or sell the stock, bro, obviously sell, because the chart is completely unstable and inconsistent. So if I can show you here the chart real quick. In my opinion, here they were driving the price up. Here they were trying to manipulate the price, you know, so that those hedge funds can cash out completely. They could milk the Tesla, you know what I'm saying? And then everyone was jumping here on this bandwagon. And right now people are in trouble, okay? Then additionally, bro, net income is in minus, obviously. The stock is way overpriced in terms of P/E and intrinsic value. Then price is above 150. Then they also don't pay dividends, which for dividend investments is really important. But they are quite profitable since the last few years, you know. Since 2020, 21, they are extremely profitable, bro. So let's see what will happen, okay? In my opinion, do not buy this stock at this exact moment yet. If you are really interested in it, then put it on watch list. But for me, I don't see Tesla as some special stock whatsoever. I don't know, it's just hyped up, you know? So let's see what will happen, you know? Now, yet again, bro, if you are interested in outperforming the S&P 500, click the first link in the description. If you want to know more about stock market investing, more about investments in general, click subscribe, join me on this journey. And bro, do the hard work and see you on top of the world.